Can you hear me, Rudder? Sean? You can hear? Okay. Sorry. All right. Good morning, everyone. Sorry about that. Couldn't hear myself, so I didn't think it was working. All right. Let's kick it off. All right. U.S. markets last night, a bit of a sideways session. Obviously, you can see there we held up reasonably well into the close, and Nasdaq actually finished just a hair down, but we did set records out of for the Dow and the S&P again, closing records. We had a huge number out of the ADP jobs report yesterday. It was a very, very big beat. Obviously, we've got the July 4th Independence Day holidays in the States on Friday. And that's pushed all of the data points one day forward. So the ADP number on Wednesday yesterday rather than Thursday, and tomorrow today's non-farm payroll number on Thursday rather than on Friday. So this is really, really important. It's going to be a big, big data point today. After you had Janet Yellen, she also came out yesterday and spoke and mentioned that the Fed's focus has to be on jobs, obviously heightening the importance for tomorrow's number. You did get the Treasury yields starting to run a little bit on the back of the ADP number, although it took them a while to get going. Toward the back half of the U.S. session, they really started to accelerate a little bit. So I think it's going to be important to watch today's reaction to the non-farm payroll number, especially if it's also a really strong number like the ADP number. We had Bank of America that rallied nicely after an upgrade by Deutsche Bank yesterday, but very little to pay attention to really. I think the most important thing is that yesterday we consolidated the gains from the previous day, typical of bull markets, and that's all you need to know at the moment. So we will continue to watch that over the next few sessions, see if we can hang on to those gains. Asia, kind of a bit of a mixed reaction on the back of the U.S. holding up, same sort of thing. I mean, small corrections, but more or less also consolidating gains, so probably bullish. Overall, we had the Shanghai financials that rallied after the People's Bank of China allowing banks to set their own yuan rates with clients. We had Sydney outperforming, obviously, because of good building approvals numbers, but mining stocks really just starting to play catch up and getting back to up to speed with the rest of the markets after lagging for a really long time. And I think that the China thing, the story is it seems like it's starting to wear a little bit thin. You haven't seen a whole lot of China bearish news coming out recently, and I think that's one of the reasons why we're starting to get some relief out of the mining stocks. If you look at this chart here, it shows the G8's export dependency on China. I mean, these are the amount of exports that are being consumed as percentage of GDP by those economies. So, I mean, I think that's a really, really important number. To have a look at it. And you can see how important they are to Japan. You can see how important they are to the U.S. I mean, we're sending a hell of a lot of product over to China these days. So just remember that in the grand scheme of things. If China really starts to weaken, if China's economy were to really start to roll over, if you're really starting to get some proof out of that, it's not, that you can't just single out China and say, China is going to break down here. It's going to affect the rest of the world and affect them badly. All right. This morning we had a rights issue, a book build by Steinhoff, issuing 16.5 shares for every 100 owned. They did that at $52. So obviously expect Steinhoff to come off this morning. It was trading about 60 and a quarter yesterday. At a point traded down to 59. I expect it to come off a little bit more this morning after that rights issue. All right, a hell of a lot of market data out today. We had services PMI numbers out of Japan and out of China. China was better than expected. Japan was a touch soft. We've also got the same. We've got PMI numbers here locally at 9:15. We've got PMI numbers across the Eurozone between 9:55 and 10:30. Then we've got retail sales and the ECB's main refinancing rates are going to come out in the middle of the day. And then later in the States, we've got a slew of numbers. We're actually going to have initial jobless claims and non-farm payrolls on the same day, so it's a huge day for data, as well as PMI numbers, Bloomberg Consumer Comfort, ISM non-manufacturing, probably the biggest data day that I can remember in the last couple of years. So this is huge today. I think We may see a little bit of sideways trading globally, maybe some small profit taking into the U.S. session because of how big everyone knows that these data points are going to be. So just be patient out there. We're obviously seeing, we're continuing to see low volumes. I think today you get a huge beat out of the non-farm payroll numbers. It could really get things cranked up, and potentially it could end up being a sell into a positive story there if it can get interest rates going. Right, let's get into the maps. All right, first thing we're going to have a look at here is the U.S. long bond. Right, we're going to look at this on a 2-year. We've looked at this chart. I think we looked at this chart only a few sessions ago. I just wanted to come back to this, and the reason why is we had a big rally yesterday out of the, we actually had a big sell-off in bonds, but a big rally on the yields, which is what we're looking at here. This is the 30-year Treasury yields in the States. And we obviously broke down out of this neckline from the head and shoulders here. This is an incredibly symmetrical chart. Everything just kind of falls along this line here. So it really ups the importance of that. I mean, we're going to look for yields today on the number, which is going to be really important as the jobless claims and the non-farm payroll number comes out. We're going to look for this thing to get above probably 3.5 on the 30-year yield. For us to, sorry, I'm making that up. Why does that number seem wrong? Yeah, sorry, 3.5. Okay, that's right. 3.5 on the 30-year yield. If we can get above 3.5, we can definitely see, I think, potentially a catalyst for the market selling off. I just want to refresh everyone's memory. Maybe half a year ago, or now it's quite a while back, maybe a little bit less. We had a monster sell-off in local interest rate sensitive stocks, as well as a big sell-off in the rand. That all came on the back of, if I'm not mistaken, it was this spike up here. So yeah, it was toward the end of the year last year. If I'm not mistaken, it was this spike up in Treasury yields that really got the sell-off in emerging markets, the higher yielding countries, some of the bigger risk countries, because as the U.S. yields started to rise and started to narrow the spread between U.S. debt and emerging market debt, it really has to, if it will essentially force rates higher for a lot of those countries. We're already potentially looking at rate hikes anyway, so I think it would be a big negative for South Africa if yields pop above, long-term treasuries in the States pop above 3.5% on the yield. All right, after that long-winded explanation, let's look at some stocks here. Let's look at Telkom, which you can see here. I'll shorten it up a little bit, but really kind of flagging over the last few sessions, flagging into support. Yesterday looked like we potentially broke out a little bit off of the 45 level. A lot of people calling this thing significantly higher. Apparently these guys have been in talks with Netflix. So just watch this one closely. It continues to kind of break out of these little consolidation patterns. Can potentially run a little bit more. All right, if you look at Exxaro, same sort of thing. We've shown this chart a million times over the past year, and it just keeps coming down and testing the exact same level over and over and over again. Just wanted to point out again today that we are at that level. At some point, something's going to give here in this setup, and if we do drop this level, and we can drop it obviously on a closing basis, it could get messy here. The level's at 137. Like I said, if we drop it, look out below. We could have a lot of downside there in Exxaro. All right. I want to show Coronation again, and I want to show it simply because I think yesterday was a little bit of confirmation. We had obviously from the breakout here and the drop below of the neckline. You can see here we've put in this consolidation just below the breakdown from support on the head and shoulder pattern. As we've dropped this little consolidation below 96, we came back up and we tested it. Yesterday we actually got through it for a little while. I think at a point we were trading around 96.50, and we really had a nice failure at that level, which I think is reassurance that level is significant and that we could continue to see a breakdown here. And remember, we set a target out here for, I think, $88 if I'm not mistaken. So definitely could have quite a bit of downside left in CMO. All right, Naspers kills me. I'm not in this stock. I got shaken out simply just because it popped too much on one day and I took profit, never got back in. It was one of the better looking setups on the board here. You can see obviously we popped out of this little resistance that we were kind of facing, and we're really coming back here to test all-time highs after we consolidated, after we broke out here, really set the stage on a little platform here to really make a breakout. I mean, yesterday was a huge move. The previous highs are up around, let's have a look here, 1350, a touch north of 1350 on a closing basis. I think we're going to make an assault on that today, if not today, in the next couple of sessions. And if we get through it, then the sky's the limit. I think this thing can continue to run. All right, and the last one I'm going to show is Old Mutual. Old Mutual broke out. I don't know if it broke out the day before or if it broke out yesterday. It probably just only broke out yesterday on a closing basis. It broke out the day before yesterday on a closing basis, but on an intraday basis it only broke out yesterday. You can see there really popping out here and kind of following the leader, which has been Sunlum the whole time. It just seems like it's just been dragging this thing up over and over and over. I think they've got a positive story with the the U.S. business that they're going to IPO or unwind or whatever they're doing there, and the market's taking that positively. But bottom line is the sector keeps running higher. This thing's breaking out again, and I would say that we've probably got a good $2 on the cards to the upside here in OMO on this breakout. And that's it for today, guys. Thanks a lot.